Welcome back to the Mortgage Mindset. Mortgage rates just hit their highest point of this year at the end of July. And while most people are sitting around waiting for the mortgage rates to fall, three major decision makers at the Federal Reserve actually voted to increase the Fed rates. That means the most common plan right now, which is waiting on the sidelines for the mortgage rates to hopefully fall in the future, it's actually becoming the worst plan. And that's not according to me. That's according to the actual data that's being released. In this video, I'm gonna show you the simple move that you can make right now, even with the mortgage rates being as high as they are, and the asking prices are still high, especially in New Jersey. I'll show you a simple move that can actually end up saving you some serious money. And we'll go over this and we'll use some common mortgage values for New Jersey, which sits around $450,000. For those who don't know me, let me just introduce myself. I'm a licensed mortgage broker in New Jersey and Pennsylvania. And most of my clients are either investors or they're first-time homebuyers. My market insight doesn't really come from me watching the news like everybody else. What I'm seeing and what I share, it's based off of real mortgage files that I work on day by day. Please understand that this isn't a pushy speech telling you to go ahead and buy a house today. I don't like to push people to go ahead and buy a property if they're not actually financially ready to do it. If you came to me, I'm gonna be very straightforward that this is not the right time for you to go ahead and buy. Not like the other people that you'll see on YouTube that will tell you, hey, 3% down, go buy a property. That's not me. But there's a secret number in today's housing market sitting at a record high that almost no buyer goes ahead and asks for. It completely disappears the moment interest rates actually drop. When the property values are still high and at the same time the mortgage rates are still high, there is an option that you could get, and that will actually help a lot. We're gonna break down what the Fed actually did at the last meeting. The secret number that you should track, 3 ways to use a $13,500 credit, and the hidden rule that limits how much cash you actually get. So what actually happened with the Federal Reserve rates and the Fed? Let's clear up the confusion, because what you go ahead and hear on the news, that doesn't actually match up with what we as the mortgage brokers actually go ahead and see on our screens and our files. What actually happened at the Federal Reserve meeting in July? At their last big meeting, they actually went ahead and decided to keep the rates exactly where they are. 3 of the members of the Fed actually went ahead and voted to increase the Fed rates. At the same time, the 10-year Treasury yield, which is the main number that actually drives the mortgage rates, it went up, pushing the 30-year mortgage rate to be at the highest level of this whole year. A lot of different websites, they measure rates very differently. Some will use old weekly averages for what the rates are, while other websites will actually go ahead and use what the updated live mortgage rates are at that time. And the rates aren't dropping fast enough because inflation is still running a little bit too high. And now at the same time, we're seeing that the job market, it's actually pretty strong. So because of that, it's not really giving the Fed a reason to go ahead and actually lower the rates. Now that's just one point of it. The 10-year Treasury yield, that's the rate that you guys want to see if the actual mortgage rates are going to go up or down. Here's the actual move. Stop stressing over what the Fed said last month, what the Fed's gonna say next month, or what the Fed just announced, and actually start tracking what the 10-year Treasury yield is telling you, because that will give you an idea if the interest rates are actually heading up or are they in a trend to go down. Section 2, almost half of the homes that are being sold with seller concessions. As we just discussed in section 1, the Fed had their meeting in July. The most important part of that meeting was 3 commissioners of the Fed actually decided and voted to increase the Fed rates. The expectation of the Fed to go ahead and lower their rates is pretty much not going to be happening. What can you actually do if you're in the market to buy a property? Actually go ahead and get a decent deal, especially if you're living in New Jersey. Recent real estate data shows that over 46% of the home sales included what's called a seller concession, which just means the seller paid cash to cover some of the buyer's expenses. So That means almost 1 out of 2 home sellers were willing to give money back to the buyers at closing to make sure that sale happens. So why is this happening? This is happening because there are more homes for sale in the market, and houses are starting to sit a lot longer compared to last year. If you were to go ahead and put a house on sale, it might sit on the market for maybe 3 to 4 weeks. Houses now are starting to sit a lot longer on the market. And since lenders aren't making as much on rent, sellers who can't sell can't easily turn around to rent their house out instead, because the rent on their current property it might not cover the actual mortgage. And at the same time, the renters and the rental market, they actually started lowering their side as well, giving the renters a reason for not to go ahead and buy a property that's completely overpriced. They could go ahead and rent for the next year at a lower price, and hopefully next year they have a better option. This is starting to happen in the market. This is kind of giving sellers a reason to give some kind of a credit back to make sure that their house gets sold. And the problem is that this option that's available to go ahead and ask for concessions, it's available right now, and the sellers are willing to do it. It's just that the buyers and the buyers' real estate agents, they might not know, and they're not pushing for that option. So what I tell my clients is, instead of trying to ask the seller lower their asking price from $500,000 to $475,000, I tell my clients to go ahead and ask their real estate agent to negotiate for them by having them give some kind of a cash credit or a concession to the buyer, so they could use that money for whether it's helping them lower their mortgage rates or help them cover a different cost at closing. So here's your move. Before making an offer, ask your real estate agent how much cash sellers have been giving back on recent home sales as concessions. Because once you find that out, say to the seller that you don't want to make an offer with a lower asking price, but you're willing to cover the asking price, but you're asking for some kind of a concession at closing. A quick heads up before we do the math. There's a strict legal limit on how much cash that the seller can give you back as credit. Asking for too much can actually mess up your actual contract. If you want me to figure out your limits and your concession limits and run the exact math on a home for you for completely free, just click the link below to book a quick 20-minute conversation. There's no sales pitch. We're just gonna go over some numbers, and hopefully I can help you figure out what the right game plan is for you. Section 3. So let's say your seller is willing to give you a concession of $13,500, and you need to decide where that money goes. And most buyers will make the mistake of using that money to just lower down the actual asking price. Let's say you went ahead and found a property for around $450,000 with a 5% down. Your loan amount is gonna be $427,500, where your basic monthly payment would sit right around $2,795 a month. Now, let's say you went ahead, did the option 1. I would say like 80% of the buyers, if they were given an option, either applying their credit from the seller, most of them will go ahead and actually apply that to the asking price. Let's say the seller gives you a concession of $13,500. You could go ahead and just apply it to your actual sales price. Your monthly payment for that mortgage would probably drop to about $84. Your monthly payment went from $2,795, and by lowering your actual sales price of the property, your monthly payment drops down to $2,711, giving you a savings of about $84 for the next 30 years. There are other options that you could actually use that I feel like are more beneficial. Option 2, let's say you use the same $13,500 credit. You use that to buy the actual mortgage rate down, which ends up lowering your monthly payment about $221 for the full 30 years. Instead of asking for the sales price to be lowered, you kept the sales price to the same amount, but that $13,500 credit that you were getting, you use that to not lower the actual sales price, but you applied it to lower your actual mortgage rate, which gives you a more beneficial monthly payment compared to just asking them to lower your asking price. There's one more option. Option 3, you could use that same $13,500 and apply it to something called a 2-1 buy down, or a 2-1 temporary rate buy down. How that works is, let's say today's rates are 6.75%. You could use the 2-1 buy down option, where it will actually lower your mortgage payments by lowering your mortgage rate for 2 years. So what happens is, for that first year, your mortgage rate drops from 6.75% to 4.75%, which would go ahead and actually lower your first year's payments by almost $545, which would change your monthly payment 2711 to 2250. And then the second year, your rate would come down to 1% compared to what the rate is as of today. So your monthly payment on the second year, your rate is sitting right around 5.75, and your monthly payment goes up to $2,516. I believe that that's a better option of where to apply that $13,000 compared to just applying it to lower the actual asking price. The 2-1 buy down option, because it drops your payment by almost $545 a month in year 1, and it still lowers your monthly payment by almost $280 the second year, while leaving around $3,600 extra to help you with your closing costs, or just have that money sitting in your account just to be safe. So that's always an option, and that's not an option that I like to give my clients just because of how the market is right now. Really think about it. It's the same $13,500 credit that you would get from your seller, but there's 3 different options that you're able to use that money into. Instead of just lower your monthly payment by lowering your actual asking price, it's better to use that money to structure your mortgage payments in a way that actually benefits you. Instead of on paper, you're able to say, hey, I got a lower price for that property. You have to look at what your monthly payments are and actual loan amounts and how it actually benefits you on that side. So here's your move. Stop asking for the sellers to just lower their asking prices, because a lot of times they just don't want to do it. A lot of times it's a very mental thing, right? A lot of people in their mind is, I don't want to sell my property for lower than what I'm asking for. It's a lot of times it's a real mental thing. But a lot of the sellers are willing to give credit back at closing. It not only keeps their values at a certain level, but is giving the buyers credit to use to help them for their payments as well. So just remember that exact rate numbers change daily based on your credit scores, your loan details. So always have a loan officer check your specific file before you go ahead and make these moves. Think about all the different options that you have instead of just applying some credits to lower your sales prices. Section 4, as we just went over seller's concession options. Now, before you go ahead and ask a seller for a huge pile of cash as credit back, keep in mind that there is a strict rule limiting how much that they can actually legally give you back as credit. These rules are called seller contribution caps. They depend on how much money you put down. So let's say you go ahead and put less than 10% down, the seller can only give you up to 3% of the home's purchase price. But if you were to go ahead and put 10% down or more than that, the limit actually doubles, and the seller is allowed to give you up to 6% of the sales price as credit. If you were to go ahead and put 25% or more down, you're able to get almost 9% as seller credit. Think about that. The more you put down, the more seller's concessions that you're able to get. And it kind of matches up with what I tell my clients always. If you can, always try to put 20% down or more. The benefits are always more beneficial than the idea of having to put 20% down on a property. So let's say you were to go ahead and put $450,000 on a property, for example, and you're putting down 5% down. Now, because you're only putting 5% down, it limits the seller's concession to $13,500. Now, if you were to go ahead and bump your down payment from 5% down to 10% down, your cash limit for seller concessions goes up to almost $27,000 that you're able to get back as credit to apply for all the closing costs, or you could apply that to, like we talked about, to buy down a 2-1 buy down option, or just buy the rate down for the next 30 years. So you have a lot of different options and a lot more money to use from your seller's concessions. So that means putting a little more of your own money down can unlock twice as much cash directly from the seller compared to putting down only 5%. So here's the move that I like to tell my clients. Ask your loan officer to check your seller cash limits at both 5% down and 10% down. So you could kind of see both of the options on paper so you can make the right choice for that right situation. And to be totally honest about who should not do this, if you don't have 3 to 6 months of emergency savings left over after buying a property, or if your job is not stable, please, please, please sit this one out. Build your emergency savings up so that way when you do make this move, you've already been educated and you're safe financially to make that next move. Because a lower monthly payment helps your budget, but it doesn't replace having those emergency savings, because none of us know what exactly is going to happen tomorrow. Be as ready as we possibly can in case something bad was supposed to happen. Section 5, the closing. So I know we went over a lot of different options, a lot of different things about seller's concessions and the market and the rates sitting as high as they are. We went through a lot of different things. To wrap it all up, rates are high. Nearly half of home sellers are willing to give you cash back. Using seller's cash on your loan saves you up to 6 times more money than lowering the sales price, and your down payment sets the ceiling. Here's the main takeaway. As soon as the interest rates eventually do drop, which we're all expecting to happen start next year, buyers will flood back in. It's gonna cause the sellers to stop giving back seller concessions, and this opportunity is gonna vanish. If you stopped looking for a house earlier this year because payments were too high, don't feel bad. You were just relying on interest rates instead of using these hidden tools that are available to everybody. This video isn't about wishing for rates to crash. It's about using the levers you can actually use to control what you can control today. It's not about hoping or wishing what's gonna happen. Drop a comment below. Have you ever asked the seller for cash back or seller concessions? And did you put it towards lowering the actual asking price? Or did you use it like we talked about and lowering your mortgage payments monthly? Would love to know. And please, if you can, please subscribe if this actually helped you and educated you to help you get ready to buy a property in the future. And if you're buying in New Jersey or Pennsylvania, definitely please just reach out to us. Let's set up a meeting where we can kind of go over all your different options. It's just a 20-minute conversation that I know that you'll walk away a lot more educated and a lot more ready to buy that property at the right rate and the right monthly payments.